Welcome back to Financial News with Kyle. I am your host, Kyle, and you're here for financial news. Today's date is May 22nd, 2024. Hey, quick disclaimer. Any information that I provide in these videos is just for general information purposes only. It is not intended to be financial advice. I'm not a financial advisor. Any opinions or statements that I make in these videos are just that of my own. They're not provided to me by any organization or entity. These are just my own opinions, my own takes. So please do your own research. Do not take any of this as financial advice. I am not responsible for any outcome, gains, or losses by any decisions that you make based on what you watch or hear from my videos. Thanks. So we have a couple topics today. First one we're going to start off with is just a headline topic that I saw kind of running around yesterday. Apparently, President Biden is releasing 1 million barrels of gasoline from reserves into the Northeast. It's coming from the Northeast gasoline reserves, and he's releasing it in the Northeast. Apparently, they're planning to strategically release about 100,000 barrels, kind of in spread out increments between the upcoming holiday, Memorial Day, and July 4th. So there's kind of a window there that they're just hoping to kind of soften the volatility of the gasoline markets and just kind of help meet with increasing demand as people are out visiting family and traveling to places and all that good stuff. Not expecting to see gas prices change at all, really, anywhere else in the country. The United States as a whole consumes over 20 million gallons of gasoline a day. So 1 million gallons coming out of the reserves is really not going to have any impact in terms of lowering prices, probably at all. So not expecting to see anything significant there. I think it's really just news that is just able to kind of clinch onto some headlines and get some attention and make it look like they're doing something. Just as a visualization of how much that is, it's 100 semi trucks full of gasoline. So we're releasing 100 semi trucks from reserves. We still have hundreds of millions of gallons, barrels, hundreds of millions of barrels of gasoline and oil in reserves. It's a drop in the bucket. 30-year interest rates on mortgages are down for the third straight week to 7.01%. That's down from 7.08%. Not a significant difference, but they're just kind of stabilizing there for a little bit. So that's nice. Mortgage applications increased 1.9%. So a few more people are applying for mortgage applications. Also have to keep in mind, though, of mortgage applications as a whole, about 34% of all applications are refinances. So that's probably not too relevant of a metric, but there was some data released on that. We talked about the minutes pending release yesterday. The minutes are out today. The market immediately dropped about 0.25, 0.3%. About 15 minutes leading up to the release, the market was already starting to slide a little bit. I'm looking over here at my charts, and we're seeing just a little bit of a bounce back, but curious if, like I was mentioning yesterday, if we'll see some rally into the overnight. We do have NVIDIA earnings later today, and that has been a super hot topic over the last year. They've always just had absolute blockbuster earnings over the last year. So we'll see if they continue to meet and beat the expectations for their revenue and their performance and all that good stuff. And if they absolutely knock it out of the park, then we may see a rally of markets overnight. So possibly we'll make another video tomorrow and we'll check back in on that. I keep looking over at the chart here to see if it's booming. The Fed minutes released today, talking on a couple of points there, which we covered yesterday, but just making sure. Balance sheet reduction starting in June 2024. the Fed will be reducing the monthly redemption cap on Treasury securities from 60 billion to 25 billion. So they're still doing their quantitative tightening, but they're loosening the grip just a little bit. So they're going to start slowing down the unwinding of their balance sheet, but they're still going to continue unwinding their balance sheet. And it's not like 25 billion is an insignificant number either. Market participants lowered expectations for significant policy easing in 2024, which, talking in the video yesterday, we also touched on that. The chances of seeing the interest rates be lowered for the remainder of 2024 just are reduced more and more and more as time goes on. I think it's entirely possible that we may still see one or two interest rate lowering events before the end of 2024, but they're going to be of very small amounts, 0.25%. I'm honestly a little bit surprised that the Fed hasn't gone back to using smaller increments than 0.25% yet, but we may start to see that too. They don't have to decrease or raise by 0.25% or 0.25% at a time. They can use 0.1%, 0.2, they can use smaller increments. That's up to their discretion. Labor market is still doing well. Non-farm payroll employment and a low unemployment rate at 3.8% in March. People are still able to get jobs. The layoffs are not quite as extreme as they could be. I do think we may still see layoffs in the coming future, but not at hopefully rates as large as we were seeing them there for a time. And companies are always going to brag about how they don't have to do layoffs and they think no more layoffs are coming, and then suddenly you're getting laid off. So those always unfortunately come kind of as a surprise. Money markets are stabilizing with their overnight rates. The overnight repo usage is slowing a little bit. I was looking at the chart previous to starting this video here. It's kind of stabilizing at about $500 billion. For a while there, it was on a pretty strong decline. So there was some concern of what might happen when the overnight repo fund gets to zero. Not something I'm particularly worried about, but it's stabilizing for the last couple of reports. So maybe we will more consistently kind of see just fluctuations around the $500 billion mark in those funds. So like I said, markets were down decently after the report came out, dropped about 0.5, 0.6%, starting to bounce just a hair. So could just be a little of a rash reaction from participants. In the video yesterday, I was talking about how sometimes you just see whipsaw, just volatility there because of the sake of being able to create volatility. And haven't seen too much of that today, but I suspect we might still see some of that in the coming sessions. The next FOMC meeting is a 2-day meeting. It is taking place on June 11th to 12th. Typically, you don't see anything happen on the first day. In fact, markets will be pretty neutral and unreacting to anything on the first meeting day. There's no news that comes out or anything. The participants of these FOMC meetings occasionally have 2-day meetings, I guess to, who knows, go over more data or talk on more serious topics. It's always the second day, which I believe always falls on a Wednesday, that ends up being the actual impactful one. So I will definitely have a video out on that day, and I do expect some pretty significant market movement on that day, even though the expectation of no rate changes is somewhat set in stone. You typically still see markets react from that in one way or another. Either they're hopeful of a rate increase or decrease or whatever the case based on data that will come out in between now and then. So that's all I have for today. Let's see what Nvidia posts later today after market close. That should be pretty interesting, and perhaps we will have something to cover for that tomorrow. So thanks for watching. Please like and subscribe. Much appreciated, and we'll catch you next time.